It seems to have now cost more money and takes more time to build. And second is also surprised to see how much disruption that the LEO constellation has caused the geo industry. So I've joined Pacific for 5 months now. So I've known the CEO and founder, Christian, for many years. Pacific, we provide Ka-band satellite broadband services to the Pacific Islands as well as Southeast Asia. I joined Pacific, which is the question that Philip supposed to ask me, because I find that Christian is a great entrepreneur, and he has really built an agile and progressive culture, and have good success in the industry. And now facing headwinds in the industry, he has also pivoted and started developing new businesses, including towers management, as well as starting to market our self-developed IP pending self-pointing antennas. So my short-term, medium goals at Pacific is to help find new partners into new businesses, to find funding to fund these new business initiatives, and also to find hopefully investors that's interested in Pacific to help us simplify or to reform our existing capital structure. Thank you.
Thank you, Willie. If I remember, did you have some intro words that you had said before? So why don't you go last?
Yeah.
And then Aoki-san, why don't you introduce yourself?
Okay, thanks. Thanks for having me here, and it's first time for me to be a panelist without having a moderator, but it'll be an interesting, experience.
Just so you know, he's messaging me.
Is he on the way? Yeah.
He's very, very sorry. He was
I'm gonna
not so
spend
well for a moment, but
few minutes to explain about myself. So I'm a partner at the Global Brain, which is Japan's largest venture capital. I'm also a co-founder and director of a Spaceport Japan. We're working on the private spaceport project, several of them in Japan. But today I'm speaking on behalf of Global Brain. So we have about roughly $3 billion asset under management, investing globally, and we have about over 500 portfolio companies, of which probably 20 aerospace portfolio companies that we manage at this moment. And this year we have made 5 space investments, 3 announced, 2 to be announced next month. 3 Japanese startups, Axel Space, Pale Blue, and Sagri. Those 3 Japanese space startups have been already announced. And 2 additional cross-border investment, one in the US, one in APAC, to be announced next month. But we are very much actively investing, and pretty much only Japanese venture capital making cross-border space tech investment. And I have been investing into space sector over last 10 years actually. So I have seen ups and downs of all the startups. And in Japan, of course, including Korea, stock market are relatively doing well. So our portfolio companies are doing well at this moment. And we have had 4 IPOs last year and this year in Japan for space startups, and 3 IPOs in Korea. So IPO. Hey, welcome.
Good morning.
Yeah, I'm just explaining myself, but trying to finish up my introduction. But boom is coming to the Asia, and we're very much excited about having more IPOs in Tokyo Stock Exchange and also Kosdaq. Thanks.
Hello, good afternoon. I'm Dara Panahi. I'm a partner with Milbank LLP. I head the firm's space business practice. We're a law firm. We work with all actors in the industry, supporting corporate, commercial, finance, insurance, regulatory, and God forbid, bankruptcy and restructuring scenarios. Philip asked me to give you a sense of what the market is doing. Even though I'm a lawyer, I do some finance. I pretend to know something about finance and M&A and investments. So I'll give you a very quick macro view, and then I think we'll talk a little bit more about maybe what's going on in Asia together. So, from a macro high-level point in terms of investment M&A, and capital markets, the markets are very volatile. There was a dip in August, a global dip in terms of the entire market, but there was a very quick recovery, and we've seen ongoing rally, particularly being driven by tech stocks. So these are the companies that have global footprints: Alphabet, Apple, Amazon, Meta, NVIDIA, and others. These are the companies, literally 10 of them, that are driving the equity markets worldwide. Up through yesterday, there was an expectation that inflation would continue to cool, along with general improvement in consumer sentiment, which is important in terms of capital markets, in terms of investments. There's also a view that we would start to come back to a more balanced market with more capital markets activity, more bonds being issued, more IPOs occurring. Now, that may change. The election just overnight has had some interesting impacts in global markets. There's a surge in the US dollar. US bank stocks are significantly surging. Declines in the Asian markets as a result of these, an expectation of tariff trades to be imposed by the new US administration, which in turn would result in escalation of interest rates, not the de-escalation that we're hoping for, as well as other secondary impacts that might come from tax cuts and deregulation that's expected from this administration. So there's definitely been a bit of a reversal in terms of the progress of the market. If that bears out to see, we shall see. This is just a knee-jerk reaction in the sort of the markets in terms of what the next few months will portend. We shall see. Now, drilling down to space. For the space industry, private investment activity has actually been rebounding. There was essentially a bit of a dip in 2023, but there's been a significant rebound. Space-related stocks generally are underperforming the indices, whether it's a NASDAQ or whether it's the FTSE or Nikkei. Generally, they are. But the interesting phenomenon from a space standpoint is that there's a very significant split or bifurcation between public space companies that are doing well and public space companies that are doing bad. There's no question we are seeing clear winners and clear losers. Currently, year to date, the winners, top 5, AST SpaceMobile, Intuitive Machines, Redwire, Rocket Lab, and NBA. A couple of them are here. A couple of them have spoken on this stage. And then just a couple days ago, last Friday, Globalstar's stock jolted 30% on news that Apple is committing to fund $1.1 billion to expand its space and terrestrial network, and also to purchase a 20% stake in the company for about $400 million, so 1.5 all in. In return, basically, Globalstar is committing 85% of its current and future satellite capacity for Apple applications, direct-to-device, essentially. In the private market, deal size continues to be constrained. Investors are very cautious. They're selective. They're looking at fundamentals. But funding rounds are happening in the private market without any particular logic. Companies that have raised significant private money this year: Apex, Astronis, Cesium, Deorbit, ICEYE, ISAR, Loft, Marlin, PLD, Varda, and others. And then there's been a notable pickup in M&A activity, some large, some small, some very situational, but some of them I'm sure you've heard about, whether it's Iridium Satellis, SES Intelsat, Lockheed Martin, Terran Orbital, Gilat Stellar, Eutelsat OneWeb essentially doing an outsourcing deal for its terrestrial segment with EQT, DirecTV Dish, and GoGo Satcom. Now, you could look at these and think that this might portend a trend, or you could look at these and find situational realities as to why these M&As are happening. And it's all over the board. In some cases, these M&As are a reaction to new space and innovation happening, so we'll call those defensive M&As. In other cases, it's more traditional M&A where you're expanding scale by acquiring some company that can give you broader reach into the market. In other cases, it's a horizontal play, which is you're going down either directly to the end user or you're gaining essentially more within a silo of services. You're not just doing one segment of it, you're doing more of it, whether it's distribution, whether it's direct to retail, whatever the case may be. But there is more M&A, and we can talk a little bit about how that relates into Asia. But the observation is that the M&A largely has been the result of coherence coming back to the market. We've had almost 12 years of relatively easy money, and by that I mean that it was not hard to raise money. About 2.5 years ago, that stopped. And as companies run out of runway, the balance sheets become constrained, they have to get creative. M&A is one creative way to solve issues, whether it's scale whether it's direct reach, whether it's solving for a margin that's diminishing in your business. So just some high-level thoughts there. Thank you.
Nice, well done. Thank you for the excellent introduction.
So, yeah, before you came.
All right, nice. So in that sense, we can move to APEC because, again, Dara, in your nice introduction, you were mentioning a lot of companies, but maybe, again, the Asia-Pacific region somewhat avoided the introduction. And so this year we have seen some very interesting things happening both on the IPO side in the last 24 months or so with Contec, Lumiere, Scale, iQPS going public, and then on the M&A side as well. So I guess open second question, why is Asia-Pacific such an interesting place with so many deals coming up? And also on the investment side, why so many European, US companies are coming to the region to complete their growth rounds here?
Yeah, I can share some stories. So I see many US and European startups, space startups coming to Asia for fundraising. And the reason for that is just Darryl has mentioned that the especially Silicon Valley-based venture capitals are so much cautious about investing into space startups because of what happened for the SPAC companies. Some of the SPAC companies, doing not well in the stock Nasdaq exchange. So they are coming to some of the VCs and also corporates because corporates in Asia are still active, especially Korea and Japan. Some of the large listed companies have been investing like hundreds of millions of dollars into space startups in the US and Europe. That's why they come here. And also there's opportunity to collaborate with the large corporates. So and also venture capitals in Asia is still very much active, both government funds and also private funds like us. So there's a shift coming to Asia. However, they have to get back to their own land to secure, to find the lead investors, or their exit market is in their homeland because they cannot go to IPO at the Tokyo Stock Exchange or Kosdaq. It's almost impossible for foreign companies to go to IPO in Asia. So there's some difficulties. Now, but there's a chance in Asia. That's why people are coming to raise some funds here.
Philip, in a way, I would say that what we're seeing in Asia Pacific, in a way, is a virtue of the democratization of space, right? So whether you want to attribute it to the cost of getting to orbit coming down or other barriers of entry diminishing, the reality is that you look at certain elements. If we're going to look at venture, because I think we want to talk about venture, what do you need for a venture ecosystem? You need institutions of higher learning that are producing, cutting-edge thinking that will have disruptive business models come out of it. You need access to capital, and you need a support structure around it. Now, we can say that maybe Silicon Valley or other parts like that were models, but it's not the only way to do it. What you have and what you're seeing in the Asia-Pacific region is you have institutions of higher learning, you have addressable markets, you have the availability of capital. And so as the VCs in North America and Europe have maybe hit a certain level of concentration and plateau within their portfolios, one virtue of that is that you have much more availability in terms of potential targets to finance in Asia-Pac. You have cleaner balance sheets, you have new ideas, and more importantly, you have a massive addressable market that has not been looked at until recently.
Yeah, just to add to the comments that's been made, I think Asia Pacific still presents a lot of demand and very strong growth going forward. And I guess, we all have a bit of a romantic idea about space, and given the success and I guess all the marketing from US on SpaceX, there's a lot of attraction. But I think compounding that as well is the geopolitics. So some of this technology, I think countries want to develop themselves, and they do own it themselves. So I think there's also one of the reasons why I think there's a lot more, I guess, local domestic funding requirements, apart from, I guess, instead of just purely from the US. Yeah.
Cool, thank you very much. And then something I've been thinking about, and it's a follow-up question, so Dario spoke about the sustainability of the ecosystem, and obviously for all of the building blocks to work, the public companies here need to be successful. And then we have seen that all of the IPOs in the region in the last 24 hours were in the sub-billion-dollar range, and it's somewhat a danger zone for publicly traded companies, often in terms of trading activity and analyst coverage, which they need to be successful in the long run. So, all of these companies which went public, is it a good idea, or we will see sort of maybe some consolidation similar to SPACs we've seen in the US, because the analyst coverage, maybe trading activity is not sufficient to make them successful in a long run?
I'll take a quick first try at that, and I think others can join in. I think we've maybe beat this to death, but the SPACs in the space market were a massive failure for very basic fundamental reasons. There's a few of them that have actually done okay. Again, back to fundamentals. The SPAC instrument, which is a way to become public faster than a traditional IPO, is really intended for a company that's mature, a company that has revenues, a company that has a product that's proven and is working. And so you've de-risked all of those elements of a corporate evolution, and you're finding a quicker, more efficient way to go public. The majority of space SPAC companies that went SPAC in the, let's say, 2020, 2021 timeframe were growth stage or pre-revenue. They did not have proof of concept. And most of them actually didn't have the redemption, so did not raise as much money as they thought. So they were in a tough spot. They had less money to develop what they were doing. Their projections and the expectations they set for their investors were all speculative, based on guesses, not based on reality or based on something that was objective. And so I think it's a very good cautionary tale of what not to do. Don't run to the public markets because it's cheap. It's a matter of an interest rate environment that made it more possible, more interesting. Fundamentals are fundamentals, and as a lawyer who often advises companies what to do and what not to do from a legal risk standpoint, if you cannot disclose with some level of certainty what you're going to achieve and what time frame you're going to achieve it and how much it's going to cost you, you have no business going public. So to your question, I think if anything, it's a good object lesson of what not to do for a early stage, growth stage space company. Don't go public until you're ready to and you have a reason to. And to your other point, one of the other problems is that you have coverage. If you're a SPAC, many of these SPACs didn't have much trading. The amount of trading in them was done by a very little, small group of investors. That will depress your stock price. And the analyst's coverage doesn't help if you're pre-revenue and have nothing really to prove.
Yeah, I agree. I'm never a big fan of going public, especially when you are not sizable enough and you don't have enough trading volume, because that becomes a huge drag to the company. The amount of reporting, the amount of compliance you have to do, it's just not worth it. HSAT as its prime is still there's not much trading, and they actually went private afterwards. So I mean, there are many ways to source financing, but for a young company with not much of a market capitalization or trading potential, I think stay private.
Yeah, I can sum for Japan's perspective. So Tokyo Stock Exchange, we do not have a SPAC scheme. So all the 4 listed space startups have gone through the traditional IPO process, and it's not easy. It takes forever to complete the process. So you have to show your business model is sustainable, you have enough cash, and you have customers, and they look at everything. And if you pass, you're good to go. So, in a long-term perspective, you have to show that you will be a profitable, company, and that's what it matters. And I think same case in Korea. But that if you don't have those profitable business plans and business models, it doesn't work after IPO.
Great, thank you all very much, and I think you offer an interesting answer in the sense that indeed all of the companies which went public in the last 24 months or so actually had their revenues at least in the early tens of millions US dollars. Anyway, let's move to audience questions, and thinking which one would be interesting to take. Give me a second to read through them. Well, so maybe I'd like to start actually from the last one. Is there a possibility of a regional geo operator M&A? We are seeing amongst global operators. Anybody would like to take a first step on that? Maybe Willie? Is that something you are comfortable discussing?
That is always a possibility. I think we're looking at this for, I think, the past 10, 15 years. So a lot of talks, but for many various reasons, somehow they don't materialize. I guess with the change in the industry and the headwinds, and maybe this time there'll be more momentum for M&A within the region. But definitely, on a standalone basis, it's not straightforward to be viable. Yeah, so that's my view.
So maybe to follow up on that, I guess the main issue here is just that the companies are like quite strongly nationally based. Like thinking about Tycom, obviously very strongly based. So and that would be the case for any of the regional operators. So is there any reasonable path to sort of bridge this, like one market specific type of companies, or just move from maybe or maybe to reframe the question, as we are moving from these regional operators from SATCOM to like broader space, is it maybe improving the prospects for regional M&As?
I feel that actually with the geopolitics, actually they could be even more, regional operators. Each country wants their own satellite. I think that is what's going to happen. Actually, for potential M&A, maybe Pacific is only one, and maybe ABS is available, for global operators to merge. So this is my view.
Any of the Hide or Dara could follow up, or should we move to a closing question?
I mean, I think to Willie's point, we've talked about this for 20-something years, and it hasn't really happened for a reason. And I agree with Willie. We're actually seeing the other trend with space becoming more and more a national security realm. You're going to see more focus on national interest in spacecraft. Spacecraft are getting cheaper. You can get sort of micro-geos and other geo equivalents for less. So some of the prospects in terms of the logic of scale that you may use as a basis for regional consolidation, that's actually eroding. Now, the reality is that some of the companies we're talking about today probably won't be there, but that'll be for broader market forces, not because they couldn't do M&A.
Cool, and maybe for a closing question, I was thinking we could talk about the operational level a little bit, because obviously any finance discussion always had the part of like macro, what the markets are doing, but then I realized that all of you are very much in an operating role, actually like working with companies on a board level every day, daily. So what is the something, you take from the macro environment, but then, advise them today, or something we are focused on today? And I think you can all take, 1 minute, and then we conclude the panel.
Maybe we'll let the venture capitalist whisperer start first, and
yeah. So the most important advice I give to startups is that try to keep your company as lean as possible, because in the past, up until 3 years ago, space startups used to raise a lot of capital with the higher valuations, which doesn't work now. So you have to keep you have to keep your burn rate as low as possible, so that you will have a decent market cap, or your valuation, so that you will have more investors investing into your company comfortably, and that's all it matters at this moment. Valuations has been too high for the last few years.
Again, coming at it a little bit from sort of maybe the legal or the sort of operational side, the number one mistake we've seen over the years is a growth stage company losing focus on what it is supposed to do. So, as a startup or a growth stage company, you're either disrupting something that's already being done, or you're disrupting something that's not available, and you're introducing that service or that product, right? Those are basically the two things that happen. Many of them lose focus on what they are supposed to disrupt, and that ends up becoming, cost, delay, time, and then they can't raise money. That's mistake number one. Mistake number two, sometimes you need to tack. If you come to a realization that you're spending time and money trying to disrupt or trying to introduce a new service and product, and you can't do it, Many companies still have resource, they have time, they have engineers, and they could tack and do something else. They don't. They run it straight into the ground. So one, focus, but also have the courage to tack when you need to and do it quickly and emphatically.
Yeah, I guess, yeah, as a startup, you have to be agile and understand what the customer's requirements are. But one of the problems right now is actually a lot of customers actually don't know what they want, or they're very confused at the moment. But one thing I think is very important is because, again, of the geopolitics, there'll be a lot of government, defense, security requirements. You know, if you're in that space, great. If you're not, I think you should tailor a bit of your business plan to address those needs.
Nice. Well, thank you very much, and please join me in thanking our excellent panelists for their contribution.